So for the rest, the answer also can be used. Basically are the same meaning. Okay, now next is they want us to prepare the appropriation account. The format fixed for the appropriation account. So I put in the format first. Amina, Amala, appropriation account for the year ended 30th June 2000. Okay, I put down the general rule. Later on, you'll try it out. Okay, first start from the profit for the year. There is a fixed format, like a formula. Okay, start from the profit for the year. And then if you have any interest drawing, you put it in. If you have any interest capital, you put it in. Next, your salary, also the same. Okay, put it in. Then the last will be your share of profit. So we use this general guide to find what are the information that we have here. Okay, here. Our profit for the year is how much? Let's see. Okay, profit for the year is 17,500. Okay, interest on drawing. In this question, they have drawing, but their partner agreement didn't mention it. So in this case, actually don't have. Okay, take it up. Next is the interest on capital. Interest on capital, they got mentioned about it, which is in here. Interest on capital 10%. So 10%. So now what we got to do, we have to calculate interest on Amina. Okay. For Amina, the capital 50,000 times 10%. Then after that, he has introduced another 10,000. So plus 10,000 times 10%. But this one only half 6 months. So 6 over 12. So this one is only half of it. Okay. When I come to Shamala, Shamala didn't change anything for the capital. So we take 20,000 times 10%. So that is of the whole year amount that we have. Okay, so the rest of it, okay, this one don't have. So in this case, this salary I also have to take it up. So basically only one item they have. So to calculate this one, we take 50,000 times 10% plus 10,000 times 10% and then divide by 2. So 5,005. And then for this one is 20,000 10%. So we get total. So take this minus this. So we get 10,000. So the next is the share of the profit. So share of the profit we have the ratio is 3 to 2. So 10,000 times 3 to 5, 3 over 5. And then Shamala is 10,000 times 2 over 5. So this is information that we get. So take this one, divide 5 times 3. So this one, divide 5 times 2. So this amount, same. So settle this account. Okay, so here our appropriation account. Okay, settle. Now the next is they ask for the capital account. Okay, capital. So need to put in capital. Okay, I put into here. Okay, the financial year end start from the 2000s, 2016, and oh my god. Okay, next is for the month of July 1st, balance brought down. Okay, our balance brought down is balance brought down in here 50,000 and then 20,000. 50,000, 20,000. Okay, 50,000, 20,000. So the next one, additional capital, which is on 1st January 2017, 10,000 introduced. So 2017, okay, 2017, January 1st. So this one is the cash. Being cash for it. Let's double check. Okay, cash 10,000 for Amina. After that, no more other information talking about it. So our this side balance carry down 2017. Okay. In here we have 30th June. 30th June. And here balance carry down. So amount is okay. Here the amount 60,000. And then this one no change, 20,000. So subtotal so here we have 60,000 and then 2,000, 20,000. Okay, 20. So this capital account. Then another entry, carry down, brought down, complete it. So here will be in June, July 1st, balance brought down. 20,000. So done for the capital account. So the next one, they asked to prepare the current account. So the current account, the format, okay, just to put the format up first. The date, and then Amina and the Samara. Okay, so here dollar. Okay, we talk about format of this account. So for the current account, the balance brought down can be debit or credit depending on the question. Okay, so if the question say credit balance, you put credit. If the question say debit balance, you put into the debit side. Okay, now next thing is that just now the format that we have, uh, appropriation account. Under the appropriation account, when we have interest on capital, we put into the credit side. If we have the item, which is salary, we put in the credit side as well. If we have the share of the profit, we also put into credit side. If we have the interest on loan, we also put into the credit side. Okay, now back to this debit side, we have the drawing. We have the interest on drawing. This is a fixed interest on drawing. Okay. If we have the loss, share of loss. So this is a format. Balance carry down can be debit or can be credit depending on the question. So this is about the current account. The format here, credit side, income to okay. Whereas if a debit side, it will be the expense to, so that's why it will reduce. So this one reduce the capital of okay. Whereas in here, it will increase the capital of partner. Okay, take notes for this all the information. Now we go back to the question. We see what are the item in. Okay. So I put into here because I want to take the information. Now let's see what are the information. We can take almost all the information from the appropriation account. So under the appropriation account, we have interest on capital. So interest on capital for Amina, and then for Samara. This one don't have take out. And then share of profit, 6,000, and then 4,000. Okay, now next is that the beginning of the year. Beginning of the year. Okay, let's put in first. Okay, beginning of the year, the current account, we have credit, both also credit 4,000 and 3,000. So here, 4,000, 3,000. And we have the drawing. The drawing amount is 8,000 and 12,000. So 8,000 and 12,000, 8,000 and 12,000. So now, whatever don't have, we take it out. So here, don't have. These two don't have. Okay, interest on loan. Is there any interest on loan? Let's see. Okay, this question. Okay, they don't have the interest on loan. So take it out also. So this one also don't have. So basically, I think the account is quite straightforward. Let me copy back to the question. Capital account, current account. So this one also don't have, take it out. Share profit. Okay. And then this side is 15,000. This side is 9,000. So that means I have balance carry down. Balance carry down here. Okay. So here 8,000, here 15,000. So I take this minus this. So this is my balance carry down. Whereas in here is 12,000, here is 9,000. So I take this minus the credit side. So this one I have debit balance. So next is the 2016 and 2017. The date is financial year ended 30th June. So June 30th. Whereas in here I have to put 2016 July 1st. In here I have to put 2017 30th. Okay. Next put here July 1st. 75, and then here 3,000. Okay, double check. Okay, correct. So this one settle. Okay, so this account current account settle. Okay, what else the question they ask? Okay, let's see what are the questions they ask. Okay, settle current account. Next is that D. Explain how the financial statement would have been affected if Amina has made a loan to the partnership instead of the introduced additional capital. So first of all, financial statement. Financial statement. There are two conditions. The main is an income statement. Because this is a partnership, we have another appropriation account, and also statement of financial position. So these three, they ask what is the impact when instead of the capital, now we change from capital to loan. What What's the differences between capital and the loan? Okay. Capital is first, this one is under capital section. Whereas for the loan, this is under non-current liability. Under the capital, the company, there is no rule saying that you must pay the anything unless they say in the agreement. So this agreement saying that they will get 10% interest on. This is what the partnership agreement say. So they say that affect Amina. So if I put the capital, I get, she get extra, how much 10,000 times 10,000 times the 10%. So after that divide by 2. So he get as 500 for the addition, for the he total get is 500 for the additional capital he put in. But if he going to change to the loan, the question didn't tell us that whether they're going to pay the interest on loan. Okay, they didn't mention. So we don't know whether he will get the interest on loan instead of capital. So in this case, what happened if we change it to this? Then Amina will lose the income for interest on loan. Okay. But because this no need to pay out, so what happened to the appropriation account? Appropriation account. So appropriation account will, number one, because no less 500 interest on capital, and our share of profit increase 500. Share of profit increase 500, but portion for share of profit to Amina only increase 300. This 300 is taking 500 divided by 5 times 3/5. So this is the amount that he will get. He get 300 and not the 500 total. So the net loss, net loss income to Amina is 200. So this is the problem which affecting Amina. Overall, this is the net impact. Interest, we don't know. You can mention about it. Interest, unknown. Okay. But because this is only 2 mark, what I will say that you talk on this point, these two is more than enough to cover your mark already. Get it? Can? Clear for this part? Because 2 mark only, we talk on this one, and this one is more than enough. Now next, Amina is not happy that Samara drawing are greater than her. Samara said that she is entitled to take out the business more drawing than Amina because she does a greater share of the work. So here the problem of the partnership, they only have interest on capital. They don't have the they don't have the interest on drawing. So when you don't have the interest on drawing, so partner tend to withdraw the asset or money personal use. So this is a problem when don't have the interest on drawing. So for Shamara is the capital. If we see the capital that Shamara invested, capital Amina invested plus 10,000 additional 60,000. Samara only invested 20,000, but Samara the drawing is 12,000 more than the Amina. So explain two reasons why Amina is not happy. First, number one, Amina invested 60,000. Okay, 60,000 compare Shamara investment, Shamara investment only 20,000. Okay. By taking out the drawing, Shamara's capital compare to drawing has reduced the net invested. So this is one of the reasons that because Amina invested more, so that by right she should take more. She should take more drawing compared to Shamara. Okay. The next thing is that what else that we can talk about? Two reasons. And second reason, the business or the partnership. The partnership did not have agreement on the interest on drawing to prevent to withdraw Okay, next, what else that we can think about? Inventory, investment amount bigger, then no partnership agreement. And what else that we can think about? Do not have agreement on the prevents. What else? How can we talk about? Let me see. Okay. What else? Let's see. Shamara has 3,000. 12,000. Okay. Here, the drawing is 12,000, but the profit only 4,000 for the year. So in this case, what we can say that number 3, the drawing amount of Shamara 10,000 is more than the share of profit for the year. And Shamara is owing 3,000 to the partner. So this is the cause Amina not happy. So this could be the reason they can put into here. Okay, so for this one, these three, you can use it. Or you can, if you can think something that logic, also can put it in. Okay, anything to ask for this question in this set of the paper? If not, we will move to the next. Any question? If possible, try to have a copy with your, so that at least if anything you detect you want to ask immediately, you can ask. Okay, along the way when I do it, you encounter something not right or something wrong or you don't understand, just put into the chat. I will look into it. Okay, now we go to the next paper. The next paper is, wait, let me share this. Okay. So this is paper October, November, paper 12. Okay, October, November, paper 12. Let's see what other question they ask. Okay, one by one we look into. We would, along the way I will do the revision. The topic is your. If not, if you cannot remember, ask again. Okay, let's see. Here they say that when Jack prepare his bank reconciliation statement, is included an unpresented check. So now I just do some revision of the bank reconciliation. When we prepare the bank reconciliation, the purpose is to check or reconcile the cash book and bank statement. Okay, so there is a purpose to check the differences. Okay, next, what else to for the amount appear in bank statement and yet to record in cash book, then we have to update the cash. Okay, for the item recorded in cash but not yet appear in bank statement, then we will prepare the bank reconciliation. Okay. The presentation wise for the bank reconciliation statement have two types. Bank reconciliation statement. We can start from the balance as per cash book. But if we start from the bank cash book, we have to add unpresented check and then less uncredited amount. So this is a form, like a formula that you need to memorize. Plus, get your balance as per bank. This is a format. If you are start from the bank statement, then in this case, this one will be less. and this one will be at. Okay, take note for it. The differences when you start from the bank statement is less unpresented check, add uncredited amount. But because normally when we do the presentation, we put the add first. Then after that only we minus. So we normally is add uncredited amount and less unpresented check. And these two differences normally is caused by the timing differences. Okay. Timing differences is that because the time the banker recorded and we recorded are different. Okay. Now next, go back to this question. When Jack prepared her bank reconciliation statement, is include unpresented check. Which check is unpresented? A check Jack received and bank, but which has not been appeared in on his bank statement. Okay, what is mean by check unpresented check? Unpresented check. Unpresented check is a check which Jack had issued supplier, okay, to supplier, but bank has not paid out. Okay, has not paid out, so that is still with the supplier, the check, or the bank take time to do it. That is called unpresented check. Okay, clear? So in here, which one is unpresented check? A check which appear on the Jack bank statement, but which has been omitted from his cash book. A check which Jack has issued to the supplier which has not been banked in. A check debited twice in the Jack bank statement in the error by the bank. So if you have this one error in the bank, so whatever error in the bank will appear in the, okay, I put in one more item in here just in case. Whenever you have error, add or less, bank error. So this plus and minus depend on the question. Could be plus, could be minus. Okay, so take notes for this one, depend on the situation. So if you have it, here also same thing. Plus and minus depend situation. So unpresented check is a check that Jack has issued to supplier, but bank has not paid up. So which one that Jack consider the answer for it? Any one of you? Got any idea? Yes, answer is C. A check which Jack has issued to supplier who has not banked in. Yes, bank cannot pay you if you didn't go and put into the bank. So that is the reason for it. Next, Ahmad bought a motor vehicle and paid the following: motor vehicle, number plate, insurance. What was the Ahmad capital expenditure? So the information, this topic is a capital expenditure. Revenue expenditure. You have to differentiate these two items in order to get the capital expenditure. Capital expenditure is that money spent on purchase of non-current asset, improving or extension of non-current So there is capital expenditure, money spent on purchase of non-current asset, improving or extension of the current asset. Okay, now come to the revenue expenditure. Is the money spent on day-to-day business, day-to-day operation for the business. Okay, so the differences is capital expenditure normally is happen one time off, but revenue expenditure normally is more than one time off. We call recurring. This one we call non-recurring. Okay, in here, which one the item that you think is the non-current asset, which is non-recurring? What is your value for your capital expenditure? Anyone of you? Yes, correct. So answer is D. Okay. So let me put in the so answer is D. This one is just now is answer is C. Let me put in so that you all have a copy. Okay, next. You see, a disposal account show the following. Disposal. Which book of prime entry was used to transfer 300 to the income statement and how it was treated? So we do some revision for the book of prime entry first. Book of prime entry. We total have 7. Sales journal, sales return journal, purchases journal, purchases return journal, 5 general journal, 6 we have cash book, 7 we have petty cash book. Okay. This to record the credit sales. Okay. This one to record the goods return. Okay. Purchases is to record the credit purchases. But this one is a goods return supplier. So here, goods return to from customer. Okay. General is not for 1, 2, 3, 4, 6, and 7. All put under here. The nature of it is normally is like general you do for opening balance. Okay, opening of the account or opening balance. Other than that, do the adjustment. Okay, or do the correction of error. Okay, what else that we do? Year end adjustment. Year end, which is normally we do the depreciation, and then depreciation, and then the provision for doubtful debt. So this is the double entry that normally we go through the journal. Next is that cash book. All the money is in the cash or bank or check. So we go through the cash book. Petty cash book, also money but small value. Okay, so this is what book of plan entry. Now, come back to this one. This income statement, we do it. Okay. This income statement we prepare because end of the year, during end of the year, we have to close the account so that all the expenses or income account have to transfer income statement, and then all the asset liability capital, we will have the balance carry down. So this is about the information for income statement. So we close it, this one, because end of the year we have to do it. So in this situation, where you think that the book of plan entry that we use in order to close it? What book that you think you should use? Here only got two choice: general journal or sales journal. There's only two choice for you. So which one you think? Because I say that sales journal is to record credit sales. This one related to credit sales? If you think yes, then could be. If not, then automatically definitely is not journal. So basically this one is not related to the sales, because credit sales journal only record credit sales. So this is not about the sales, not the goods. So we cannot take sales journal. So you answer either A or B. Now the next thing is that how we going to know this one is in the credit side, is a debit or credit? So we use the income statement concept. So this in the credit side, it will debit to debited income statement. When you debit income statement, the rule for the income statement, debit income statement, debit is expenses. So in this case, if this is expenses, in other words, this is a loss on of machinery. So far, clear for it? Okay, clear? So take notes for this one. So your answer will be general journal as a loss. Okay, so your answer is A. Okay, now settle. We move on. Anything to ask for this question? Understood this all machinery provision, how to get it? The position fixed, no change. This account. except the income statement will change. The rest, this is side is her cost, this is a provision, this is the value of the disposal. Okay, now next D. Sasa buy radio at $20 each. At the end of the year, she has 50 the radio in inventory. Of course, these three radio damaged and will cost 17 each to repair. So under valuation inventory topic, valuation of inventory. Valuation inventory saying that inventory value at lower of cost realizable. So the word lower means that we have to choose the lower price to get it. And here they have the cost. Okay. Cost definition is the purchase price plus additional cost for the purchase. For example, your carriage inwards that normally in your exam they will ask. When I come to the net realizable value, which is the net realizable value. This one is estimated selling price less estimated as selling expenses incurred for the sales. So there is a definition for this inventory. Okay, how to find it? Now go back to this question. Here the cost, your cost is 20, but these three radio they say that are damaged and will cost 17 each to repair. So and the radio can be expected to sell at 30. So in this case, my net realizable value will be taking 30 minus 70. In order to sell $30, I had to get people to repair 17, cost me 17. So my net realizable value is 13. Okay. Now compare with this statement, they say that inventory value at the lower of cost and net realizable value. So the lower for the 3 unit here is this one. So to calculate my valuation, my value of inventory, so value of inventory will be how many units? 47 unit times 20 and then plus 3 unit times 13, which is my value for it. Let me count. So the answer is 979. Okay, so answer is 979. Okay, so done for this question. Any question to ask, just let me know. Okay, now we continue with the next. Okay. For the E, which business are trading business and which one is service? Okay, the trading business. Trading business is that buy and sell goods. Okay, and normally trading business have, but service business, okay, service business is provide service to customer. And normally do not inventory. So since this topic about these two, then we just present the section of the income statement that to take notes. Under the income statement, this is for the trading section. Trading business, okay? So trading business, the first section is the revenue. Second section, cost of sales. Presentation is a fix, so you have to memorize. Gross profit, and you have other income plus other income. And then next you minus expenses. You get the profit. But if a trading section, you want to use back this format, can, but don't have this one. Okay, straight away revenue. This one normally also we input, we change to income. Okay, so only have two sections, income and the expenses, and then profit for the year. So this is the for the service. So come back to this question. Which one that you think is a trading business? Which one that you think is a service business? Anyone of you? Yes, answer is correct. Huh? Okay. So the answer is this one. Okay. Answer is A. Food retailer and the hairdresser. Okay, F. An appropriation account show the following: interest on drawing, interest on capital, share of profit. What was the total profit for the year? So we use the appropriation account to work backward to find the profit. Appropriation. Start from the profit for the year. Profit for the year. Add interest on drawing less interest on capital, and then less salary, and then we get the share. In here we have the interest on drawing, total is 2005. So our interest on drawing is 2005. And then our interest on capital 2000. And then our salary, they didn't say, so 0. Our share of profit is 12,000. Okay, which is this total add up. So now to work backward is my profit for the year. I have to take this one, add, become minus. And then plus, less become plus. So we get the 11,500. So the answer should be B. Double check. Okay, correct. So this answer is B. Okay. Now next, a subscription account show the subscription in areas 400 at the start of the year and subscription in advance 100 at the end of the year. This is start, this is end. Subscription of 15,000 have been received during. Why is the subscription appear in the income and expenditure? So I put in all the subscription account information. So I put subscription. Here, balance. What now? Something wrong. What now? Okay. And then income statement. And then balance carried out. And in the credit side, also we have balance brought down. I put in all the accounts, the details. Next, we have the bank, which is the receipt or the cash. And credit side, sometimes in the exam seldom happen, but do happen. Irrecoverable, which is the bad debt. And then during the year end, balance carried out. So beginning year, this is a beginning year. If debit side, beginning year is a current asset. Okay. Whereas in here, if a beginning year means that beginning year, credit side is a current, means that member pay the fee, pay the subscription fee in last financial year for this financial year. Okay, so pay previously before the end of the financial year for the last. So this is the detail. This is subscription is a income account. When you have income account, take notes that receive in advance is a liability. This is under other payable, other receivable topic. If yet receive or outstanding or owed by member, so this one is the asset to the club. So take those for the income account, the position of it. So come to this one. This one is a fixed. Okay, fixed. That means is in the credit side. This one also fixed. Means must be only in the debit side. Whereas come to carry down, this is end of the year. End of the year. This is member paid in advance. advance or club receive in in current financial year for next financial year. So in this situation, this will be the current liability to the club. Okay. Whereas in here, if you have this balance carried out in the credit side, end of the year means that member owed to the club or club has not received in current financial year and then this one will be the current asset to the club. So this carry down will bring it to here. Okay, you have subtotal, and this balance brought down is opposite side for each other. So this is due to here, and then this one will be going to here. Okay, so take note for the position of the account. So now, I already given you all the information here. Can you calculate what is the value of the subscription appear? Sorry, this is not income statement, my mistake. Income and expenditure. So they want, for this question, they ask you to find income statement, income and expenditure amount. Can you calculate, please? Put in the value in the debit or credit and then find your income and expenditure. What's the answer you get? Anyone? Okay. Yes, you're right. The answer is A. Okay, now let's move on. Okay, we go through slowly, at least you'll keep on revise yourself. Okay, now, a manufacturing account provides the following information. Purchase of the raw material, 50,000, direct labor, 58,000, factory overhead, 22,000. At the year end, inventory of raw material has increased by 400,000. Inventory of the finished good has increased by 9,000. What was the cost of sales? So first, we prepare the cost of sales section. Cost of sales. Under manufacturing account, inventory, okay, for finished good. Okay, opening inventory, I put in first. Opening inventory plus cost of production. And then we have any purchase from the outside, purchase of finished good. Next, we have closing inventory for finished good. So this is the cost of sales. Okay, based on this information, we need to know what is the cost of production. So our cost of production, the component, start from the raw material consumed. This is a group of it, raw material consumed. And then if we have the production, wages, if we have the direct expenses, in your syllabus, you need to know royalty fee. Okay, this one you get the plant cost. After that, you add the factory overhead. If you have work in progress, opening inventory for the work in progress, inventory for WIP, closing inventory WIP. So here you have to minus. Okay, this one you have to plus. This one basically all plus. Okay, so you will get your cost of production. So this cost of production will transfer into here, cost of production in here. Okay, and the question saying that at the end of the raw material has increased 400. This one trying to tell us that, okay, when we open my disk, I expand this information. My raw material consumed, I have the opening inventory, raw material, and then purchase raw material, and then closing inventory for raw material. Okay. So this all add up, I get my raw material consumed. Okay, and then I plus my production, my direct expenses, then I get my plant cost. So this amount, the question saying that raw material has increased. The sentence in here, when they say okay, so this information is okay. How I'm going to put, okay, let me try to put. Here, trying to tell us that opening inventory lesser than closing inventory. Okay, when closing higher, so closing inventory higher, we have to minus from raw material consumed. So take notes about this statement. They say that the closing inventory increase. So means that this amount that you're going to have in here, your purchases, You don't have opening, but you know that this one is higher, 4,000. Okay, and then my purchases 50,000. So this closing, when it's higher, minus. So my raw material consumed will be take this minus this. And then my production, direct labor is my production wages, 8,000. And then my factory overhead. My factory overhead is in here, 22,000. So whatever don't have the dimension, we just ignore it. Okay, so in work in progress dimension, so my cost of production will be prime cost plus factory overhead. This is my production. So my this one, cost of production is from here. And then next sentence, they say that inventory of finished good has increased by 9,000. Same thing. When this one increase, okay, this increase means we have to minus, okay, minus 9,000. So take our this amount minus this amount. So this one, our cost of sales for the HEC. Okay, get it? Understand how to get it? About the manufacturing account. Okay, so now next a trader provide the following information: revenue, opening, purchases. Markup formula. Markup is taking the gross profit divide cost of sales and times 100%. So in this formula, what we have is the revenue, opening, purchases, closing. So what we got to do, we do a simple, okay, revenue, and then less cost of sales. We have opening inventory, we have purchases, we have closing inventory, and then our cost of sales plus. So here is the value that we have. Value, this is a percentage. Revenue is 1050, and then opening is, okay, I insert one more column. Sales. Opening we have 50, purchases 800, closing 150. Our cost of sales is take this plus and minus closing. This is my my cost of sales. Okay. Next, to find my gross profit, take my this one minus this. And they say markup has been made. Markup, what is the formula? Cost of sales, 100%. Okay. Here, we don't know. So what is the formula? We take these two information, cost of sales, which is our 350 divide 700 and times 100%. So this is, we get the 35, which is 50%. So this answer is percent. Okay, so answer should be D. Okay, now next. Bharat did not maintain a full set of accounting record in his first year of trading. So when there is a first year, the word with the first year trying to tell you that first first year. First year, no opening balance. Okay, no opening balance, I mean no brought down. So take note for it. The word started, with the word started, first year, all this is indicate. Now come to this one. Since that no opening, how did Bharat calculate his credit sales? I opened a simple T account for the trade receivable, because credit sales is related to the trade receivable, which is the customer. So debit side balance brought down. Because they say this is the first year, this must be zero. Credit side is a debit side is a credit sales, which is the question they ask us to find. In the end of the year, the customer will pay us. Okay, some of the customer confirm. Okay, when customer pay us, sometimes we will give them the discount allowed. All the account are fixed in the position, debit or credit, no change. Next, maybe some of the customer didn't pay, confirm didn't pay, irrecoverable. Yeah. Maybe we charge the customer interest for the late payment, interest charge. So this is an income to us. What else that related? Okay, if you have any dishonor check, we have bank, but put the bracket dishonor check. This the possible information appear in the question. Bank, discount, irrecoverable debt. What else? If you have the same customer and the same supplier, maybe you have the contra. So this contra will be in here. So basically, this is the information that you will get for the trade receivable. So based on this information that we have, here we work backward to find it. The credit side, okay, balance carried out is in here, okay, because it's an asset. So closing trade receivable, which is this side, okay, credit side. So what else in the credit side? Cash received, which is this bank. So here can be bank or can be cash. Next, discount allowed. Discount allowed also credit side. So here plus plus plus. After that minus the debit. The debit is this two. Have to minus, but don't have in the question. So your answer will be B. Because no other thing. Okay. So far, okay with it? About the account position. How about since that we talk about trade receivable, this is a customer. Because I noticed some of the people still don't clear, still not clear with the customer and the supplier account. Okay, when we have the supplier account, trade payable. This is a supplier. Whatever position in here is opposite. Okay, here is the liability. This is liability. Here is the credit purchases. If the supplier charges for the late payment, so this is the possible in the credit side. If our check dishonest, then it will be in this side. Next is in here, we are paying the supplier money. So supplier receives the money. So it's in the debit side. Here, this one is discount received. This one normally we won't put in irrecoverable debt because we assume that we will pay. Okay, we are always in the, these are the good customer. So we are paying that. So we normally won't put bad debt in here. We only put bad debt or irrecoverable debt in the customer account. So this is a possible information for the trade payable, trade receivable. So far, okay. For these two, all the question here, we will do. If all of you can try look into it and then ask the question you specifically want to know, then will be faster. But if you go through one by one, then it will take longer time. But along the way, the longer time, good thing is that I will keep on refresh you with a different topic. From there, you keep on recall back. You recall back what have you learned in the past. Get it? This is like a revision class. Get it? Anybody got any question? We will stop in here for today. Any question before we end? So these two file later I will share back to you. Anyone got any question to ask? The recording later I will share it up. But after you receive the recording, please download because my space is not enough. Okay, any question? You got no question, then I will stop in here. Okay, okay, now we end here. You can exit already. Okay, thanks.